Hey, this is Trader Travis here with a Philosophical Friday, first edition here. I have part one of question mark. I don't know how many of these I want to do, so I'm going to need your feedback. If you enjoy Philosophical Friday, you enjoy the message shared in this particular video, How to Think Like a Millionaire, then let me know, and I will record more of these because I don't like to just listen to myself talk. I want to create everything for you, my community. But first, before I start off, I have an investment riddle for you. So imagine you had $100,000 in your account, you lost 60% of it. How long would it take the remaining $40,000 in your account to get back to that 100 grand if you earn 9% a year? A, 5 years, B, 28 years, C, 11 years, or D, none of the above. In this lesson, I will share that riddle as also some of the lessons I learned from one of my millionaire mentors. Now, a few weeks ago, I sent out an email to my community. In that email, I argued that people are held back in life not because they don't have access to information, but because no one has taught them how to make decisions like a millionaire. For example, the general financial experts teach us to buy and hold, which I call buy and pray. And they also tell you to, dollar cost average. They say let mutual fund managers make decisions as to what to do with your money. Now, here are my thoughts. If you don't control how your money is invested, you don't control your financial plan. And if you don't control your financial plan, then you don't control your financial freedom. So the greatest gifts my millionaire mentors gave to me wasn't the real estate investing strategies I learned or the stock market strategies. The greatest gift they gave me was the ability to think like them. They taught me how to think like a millionaire. They taught me how to make decisions on my own so that I could take 100% personal responsibility for the results in my life. Now, being mentored by someone successful can be frustrating at times because I would go to them for advice and they wouldn't really give me a straight answer, not a yes or no, like should I quit college? They wouldn't tell me, or should I drop out of college? They wouldn't say yes or no. Instead, they'd ask a bunch of questions or teach in parables that made me think. And so looking back, I realize now that they wanted me to discover the truths of wealth creation on my own. They wanted me to stand on my own 2 feet instead of relying on other people to think for me. So here are a few examples of some of the conversations I would have with these mentors. So here's me. Should I drop out of college and pursue real estate since I have a better chance of getting rich at that than working for someone else? And my mentor would respond such as, Travis, not all education is created equal. Some education can hinder your path to wealth. If an education smothers you under a mountain of debt and shackles you to a job for the rest of your life, is it really a good education? If an MBA increases your salary by 15%, but it takes 15 years to pay off the student loan debt, is that good? And that's the frustrating part. How can you answer a question with a question, But let's move on to another subject of investing. Here's me. I heard buy and hold is dead. Is that true? Should I stop contributing to my 401k and put all my money into option trading? Well, here's a millionaire's response. I won't say if buy and hold is dead or not, but let me ask you a few questions. Have you ever met a person who invested in mutual funds and retired 5 years later? Have you ever met a person driving a Rolls Royce because of their well-balanced mutual funds? Well, here's something else to think about. In 2007 and 2009, the stock market lost roughly 60% of its value. So if you had $100,000 in your account, and let's imagine it took you 15 years of working to save up that 100 grand. If you lost 60% of your money, you now have $40,000 in your account. Now, the experts say that the stock market earns on average about 9% a year. So it would take you 11 years to get back to break even. All right. So a lot of people don't believe that. So I have one of my favorite mentors here, Dave Ramsey. He's the guy who helped me get out of debt. Even though I know how to invest my money, I never could slay the debt monster. So I took one of Dave Ramsey's class, followed his blueprint. Within 2 years, we were out of debt. So it's just an investing calculator I like using on this website. So anyway, enter your starting balance, $40,000, annual rate of return, 9%. I'm not going to contribute anything monthly. Why do I want to keep pouring money into a broken investment plan? And how many years do I plan to contribute? 0. So how much will your investment be in 11 years? $103,000. So basically, the account stood still for 13 years. Okay, 2 years of losing money, 11 years of growth. Okay, 15 years of saving, 2 years of losing money, and then 11 years to get back to break even. That's 28 years of your life gone. And that doesn't even account for 28 years of inflation, which makes your 100 grand more like $50,000. So you tell me, Travis, is that a good plan for building wealth quickly? Is that a plan you want to follow? Again, answering my question with a question. But you know what? It was the best kind of teaching I needed because it did allow me to think on my own, and derive answers for my own self. Again, to take personal responsibility of my life. Now, I want to point out something here. A lot of people who are dead set on buy and hold will point out, you know what? Your example didn't include contributions. When the stock market was at its bottom, you will be buying more shares. Yes, I know that. But that's precisely why my mentor left it out of this example, because contributions distract and often hide the true reality of how losing money hurts you. And another thing that distracts you is advice from your mutual fund manager. If you call a professional money manager during bear markets like this, they will tell you that everyone is losing money and, it'll come back. You just have to keep steady. Keep pouring money into this broken system and let us keep extracting fees from your account even though we're not performing for you, right? So first, the whole part about everyone's losing money is a lie because option trading allows you to make money when stocks fall in price. Second, in 2015, one of my investment accounts had a 211% increase in the invested cash. Recorded proof of this is in the members area of one of the training programs. And that was during this market crash right here. The majority of that money was earned when the stock market fell in price right here. Now, going back to this example here, most people will see their investment account has increased in value, but they never do the math. They never realize the increase is largely due to the fact that they're pouring money into a flawed investment plan. Now, I would have never learned how to do investment math unless a millionaire taught me how to step back and see and buy and hold for what it truly is. It's a plan that works great in theory, but it has a few flaws that people aren't aware of. And the sad reality is when you do become aware of the flaws 20 plus years down the line, you often don't know what to do. You're just stuck. So if you're struggling financially, I'd be willing to bet it's not because you need a new strategy. It's like me, you probably need someone to sit you down and help you think like a millionaire, help you make decisions like a millionaire. So you take care. And again, if you found this valuable and if you want more videos like this, just let me know. And so you take care and I'll talk to you soon. Bye-bye.